Bless Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce to the Bless y'all with another video. And here today, we're going to be talking about an important topic. We're going to be talking about swing trading. Swing trading, if you're not aware, it's when you capture a good chunk of the market over a couple of days. So it can be 2 days, it can be 2 weeks, it can be 2 months. All it is trading that is longer than a day, but shorter than a year. A lot of people use this strategy. For example, let's say you buy Apple stock and you want to trade it for a short period of time. You say, okay, this is at a good price. It's a good discount right here. It dropped to $100. I think it's going to go to 150. And you want to capture a nice chunk of the move over a certain period of time. So this is a very profitable trading system, style of trading. And it's also one of these systems that you can use while you're working a job, because you don't have to be glued to your computer screen every day. And you don't have to be constantly worry about, oh, this position dropped 5%, oh, it's up 10%. And you don't got to worry about that. It's not as stressful as day trading, where you got to stare at the screen and any quick move where you look away, your count is completely wrecked. So this is perfect for a lot of people, that the average person that is working like a basic 9 to 5 or something like that. But today in this video, I want to discuss exactly what you need to do to avoid any issues while swing trading. A lot of people can tend to make mistakes, and I want to discuss those today and talk about how you can avoid them. So without further ado, let's get into the video. All right, so the first thing that is going to be very important in swing trading is trading the weekends and trading through news and overnight. This is where it's going to cause the 90% of your issues. So for example, if you have Apple stock and all of a sudden the earnings comes out, or some new news about the iPhone is broken, defective, it got hacked or something like that, and you trade into that news, knowing full and well the news is up and coming. Let's say Tim Cook releases a press and says like, oh, okay, at 4 o'clock, we're going to announce some major news with Apple. It's going to be really bad, blah, 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 whatever's going on. And you choose to trade into that news when you are fully aware that there's some potential issues that may come. This is where you run into a lot of danger. So what I recommend for people that like to swing trade over a long period of time, make sure you have some type of news going on where you can keep updated on what the company is doing. Be aware of earnings, be aware of any potential news that may come out, be aware of how the company is moving their money around. If you see some crazy money moving around, the CEO's talking a little crazy, you need to be wary of that, because that's where you can have those 10, 20, 30, 40% drops, maybe even more overnight. For example, I remember a couple of years ago, I think it was last year, maybe Target was having issues, and they were doing so well. I was in the stock. Life was good. It was going up like 5-10% every month. Life was great. And then all of a sudden they had this really strange news that came out, and you're like, oh, it's nothing to worry about. And then a couple weeks later, earnings gets announced. Boom, it tanks. And the CEO warned the stockholders about this news. They didn't say up front, oh, get out, but there were some warning signals there. You're like, I don't know if I want to be in this play. So just be aware of that. Be aware of news, because it can cost you dearly if you're not playing it right. So just be aware of that when you're swing trading. Next is going to be trading too much and trading with too much size. That is going to be a big issue for swing traders, where you need to know how to position size. Position sizing is when you figure out, okay, I have $10,000 available, and I know I can get, based on the $10,000, I only need to be risking 1 to 2% of my total portfolio. In that case, you only need to be risking $100 or $200 every trade. If you get into a scenario where you need $400 of risk, $500 of risk, $1,000 of risk, that means you're trading way too big and you need to size down. The important thing about swing trading is you're trading these positions overnight. So you need to make sure there's enough meat on the bone, there's enough space where you can handle enough risk. And the easiest thing you can do is just simply size down. Buy less shares. Maybe you want to size in to this position over time. So you want to, for example, if Apple is trading at 100 and you like it at 100, but you need to risk all the way to 90, maybe put half a position on, and then as it trends in your direction, you're getting a better confirmation, put the other half on, or another third or something like that. Just slowly, gradually go into the position and don't aggressively just size it. One, it gives you an opportunity so you don't have all your capital in one play, because you never know. Maybe Apple is just kind of sitting there, kind of consolidates for a little bit, and then all of a sudden, a couple days later, you have an even better play on AMD that you're like, oh wow, I still have a couple of $1,000s on the side that I can put into AMD, and this looks way better than Apple did. So one, you're able to lower your risk, and two, you're leaving the option open where you can invest in other companies if the opportunity presents itself. So it's a win-win. Make sure you're sizing down. It's going to pay dividends over time. I know when you're first starting out, you're thinking, oh, I want to put the max size on because I know, oh, this play has a potential to make 50% returns. But I'm telling you, over time, it's about taking your time. You don't need to get 50% returns every other month. If you can get like 5 or 10% every month, you're doing great. That's really all you need. Just 5% a month and you're good. So don't try to aggressively do things. Just keep it small and keep it consistent. The consistency is what's going to take you to that next level in this trading game. Next one is constantly watching your portfolio. This is an issue I had back in, I remember 2018, I was swing trading. I was learning how to swing trade, and I would constantly watch my portfolio. I would check it as soon as I go to bed. I would check it as soon as I wake up. I would check it midway through the day. I would be at work. I would be checking it. I'd be moving positions around during the day and stuff like that. I even had a couple of dreams about my position. I would wake up in the morning. I was like, oh man, like, am I down? Am I up? And I was trading gold a lot. I was trading oil a lot. I remember I was trading a lot of these commodity type companies. I had gold. I was big on. I had oil. It was like commodities I was mainly trading, and commodities can be a little volatile at times, especially the ones I was trading. So I always was up, just trying to figure out, am I up? Am I down? Did I make enough money? Did I sell it at the right time and stuff like that? And what I need to let you know is, if you were trading like that, one, you need to watch my detachment video, because you need to learn how to detach yourself from the money. If you make $100 a day or you lose $100 a day, you need to be completely detached from the outcome. And that's one of the psychology things that you need to learn, is just being detached from the money, because you don't need to sit up there and constantly watch the screen. One, it's going to be super stressful. You're going to lose sleep. You're not going to be thinking straight. And on top of that, that is also a signal you may be trading too large. If you're constantly stressing about, oh, it ticked in my direction 1%, or it's going against me a little bit, you may be trading a little too big, or you may not be comfortable with your trade. So you need to figure out which one it is. Either you're not trusting your strategy, you're trading too big, you're not comfortable in your trade. So either you need to focus on creating a system that actually works, the strategy where you can trust it, or you need to work on your psychology where you can say, okay, I'm going to detach from the outcome. I understand this is a probability based game. Some trades I'm going to win, some trades I'm going to lose, and I'm just going to let the market play out and let my system play out how it should. So watching the screen too much, constantly checking your positions, constantly checking your phone, maybe even if you got to delete Thinkorswim or one of these brokerage platforms off of your phone, so you're not checking it constantly. Whatever you got to do, it's no good. It's not good for your health. Trust me. 2018 was super stressful for me because I was constantly checking gold every 2 seconds. Was it up? Was it down? Oil? What was going on in Saudi Arabia? Did Trump blow it up? What was going on? Like, I was all over the place. You don't need that. Keep the stress away. Delete the apps from your phone. Check it maybe once a day, once every couple of days. Set up your risk parameters and let it do its thing. Call it a day. You don't need to be on there all the time. The purpose of swing trading is to detach yourself from the screen so you can do other things with your time. So that's the goal. Do other things with your time. And next, swing trading, one of the big mistakes is having no type of setup or strategy. In this game, whether you're swing trading, whether you're day trading, whether you're long-term investing, you need some type of strategy. You need a system that has been proven to work over time. And you need to back test this. I think people get away from this sometime in swing trading because it's a longer term type system. And there's a lot of other things at play other than just the charting. You're going to be looking at fundamentals. You're going to be looking at the earnings of the company. You're going to be seeing how the CEO is talking about the company. So it's not just you can perfectly back test. Okay, because the chart did a breakout, that's why it's going up. It might be, oh, the chart did a breakout and then there was some great earnings. Apple earned X amount of dollars selling the iPhone 14, and all of a sudden, you know, you're making millions of dollars or whatever. So with swing trading, the back testing can be a little bit different, but you need to take some time, whether you're doing a paper trading, whether you're paper trading or just trading quality stocks, where you can get accustomed to, okay, this is how the system works when I trade with these type of companies, whether you're trading blue chips that have good earnings, good cash, and you know the probability is going to be in your favor. So that's what you need to do. You need to have your setup. You need to be comfortable in your setup, and you need to back test it at least 100 times. I say 100 times is a good amount to back test it to see if it makes sense, and make sure it works, and then try it within a certain sector or a group of stocks. So whether that's blue chip companies, whether that's commodities like I used to trade a lot, whether that's the technology sector. I remember I used to trade technology as well a lot. So figure out the setup that you want to trade, stick with the setup, and then back test it over 100 times, and then you'll get more accustomed to it, how it feels. Because a lot of people go in and say, oh, I didn't even try my strategy yet. I saw it on YouTube. I saw the breakout strategy. It works. I saw it work for this guy and Ricky Gutierrez and Adam Koo and all these guys. So I'm going to try it. I'm going to try it on my account, and it's going to work for me. And it doesn't. You need to actually back test this and try it on a certain group of stocks and get more comfortable with it, because just because a system works, it may not work for you. So you got to figure that out. Back test your system, get a system that works, and then you should be all good. And last but not least, the last mistake that I see a lot of people make is patience. In swing trading is going to be a lot of patience, because you're going to be sitting on these positions for an extended period of time. So I recommend having some type of system in place where you can allow winners to run. Because let's say you have a basic 2-to-1 ratio, you hit you hit your reward target of, you made $100 on the day or on a week, you hit your target, and then the trade keeps running in your favor, but you automatically cut it. Really, you need to set it up where you can allow this thing hit 3%, $200, $400, $500, and maybe you get $1,000 return on this one play. This is the great thing about swing trading. You can allow your trades to run, and you don't need to just cut them off as soon as they hit a certain profit target. So set it up in your system, whatever strategy you use, whether you're using some type of EMA system, you're using some type of Bollinger Band or something, where you can allow these trades to keep running. You're going to lower your risk. So maybe you have a trailing stop or something that keeps inching up as a trade goes in your favor, but you're going to have some type of system where if this trade runs and it keeps running, you're going to be able to continue to capture the gains. And this comes with patience. You got to be really patient with this, and you have to have a quality system. It comes down to both of those things. So you don't need to be checking your computer every day. Relax, allow it to do its thing, allow it to move in your direction, and also have a system in place where it allows you to capture a large part of those gains. What I do recommend, if you get what I personally do, is if it hits your profit target, you make your $100, maybe you take off half of your position. You take off half of your position, and then you move your stop loss up, and then you let the remainder keep running, and you allow it to keep running, and you trail a stop. And if it hits the stop as it's trailing, you're out. So you make a little bit more extra money on top of that, and it's going to be a win-win where you make more money and you're also allowing it to run. So that's going to be the top 5 things I see mistakes that swing traders make. Let me know down in the comments if you've personally made any of these mistakes. I know I've made all these mistakes. I've done it all. That's why I can let you know I've done all these mistakes. But let me know if there's any other mistakes that I missed that I should have added. Let me know down in the comment section down below. If you have any questions, let me know. And that's going to wrap it up. It's me, your boy. Blessed Applesauce. Stay blessed. And I'm going to see y'all next time. I'm blessed to my best.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.